Hey guys, hi and welcome to the video. My name is Saumil Shah, and in this video I would like to explain you an option strategy that can consistently make you 20% gains essentially. Now, what do I mean by that? This strategy is called iron condor, and basically in short we try to, this is a combination of call credit spread and put credit spread. Before I go into all these fancy technical terms, let me show you some indicator on Yahoo Finance, okay? And then I'll talk a little bit more. So on Yahoo Finance, on the indicator, I have basically chosen Bollinger Band. The standard deviation is 2. And for the period, I'll put 20. And if you want to know more on Bollinger Bands, come to Google and just type, hey, what is Bollinger Band? Here is a list of definition. Now, how can I profit in this strategy, right? So essentially, let me explain you. So Bollinger Band gives you two band. The upper band is 141, lower band is 126. And you should always do this on ETF because ETFs are usually safe, right? And as you can see from the graph, it's kind of hard because, yeah. So as you can see from the graph, usually the stock is following the Bollinger Band pretty nicely. So I know that the upper band is 141, the max range is 141, the lower band is 125. So what you could do is you could leverage the use of iron condor here. Well, let me change my screen and explain you what this is. So essentially, whenever the stock remains between a certain band and you predict that, you basically win. So let me teach you about this game. So as per the Bollinger Band, we go to trade option, expiration of August 20th. Now, essentially, as I said, call credit spread. When we say the word call credit, it's a bear strategy. Put credit spread, it's a bull strategy. So for now, what we want to do is the upper band of the Bollinger Band, for example, right here, we saw that this was 141, right? So let's take that one. So first of all, what you want to do is you want to do a call credit spread. So I'm actually going to go to 141 and I would switch to sell call, okay? So now sell call, select option. So I select the 141 and my buy call should be on the top of that. So essentially, remember, this is a bear strategy, call credit spread. So as you can see, if the stock goes to 141 and above, you lose. If it goes below that, you win, right? So that's one. Now again, we need to add more options here. Now my lower band is essentially, I said it was 125. So heading over to $125 right here, okay? Now what you want to do is here you want to sell a put. So go to 125. Yeah, 125. So here you want to sell a put and then you want to buy a put on the bottom section and go to options, and now here you would say iron condor. So essentially we are leveraging iron condor. Now if you see the graph of profit and loss, now if you see, if the stock is at 124 to 141, you win, you will get $22. Essentially, if you calculate your return, so if you pull up a calculator, and if you calculate a return, so the rate of return is basically the difference between your investment. So you earn basically $22 and you are about to risk $100. So that into 100. So essentially you're making 22% return on your investment. So if you see, if the stock remains below these two bands, you win, you get $22. If you say review, so you're risking $100, so your risk is $80. So essentially, it's according to the charts and an indicator, it's very unlikely that this stock by the end of this week would fall below that Bollinger Band or would go above that Bollinger Band. Of course, it's possible, but it's a very steady income. You can, I don't see any catch here, right? But the maximum amount that you can lose here is the $100. So you got $22. So essentially you lost $80, right? So, this is called iron condor strategy. Usually people use Bollinger Bands and then based on the Bollinger Bands, they decide this iron condor strategy. Another thing, if you want to try it out, what you could do is you can also select this based on the Don't Chan channel. Again, if you want to learn more on Don't Chan channel, go and read a little bit about Don't Chan channel. So essentially, Don't Chan channel will also give you a couple of bands here. So the upper band, it's a little hard to see, but yeah, the upper band essentially here is about 137, 138. I wouldn't choose this. I would usually go for Bollingers. I would choose like 2% because it's a bull. It's an ETF. It's a bull ETF, so it usually goes up. So I would choose around 140, 141, 142, and the lower band. So usually it's always above the middle band. So you can choose something below like 122, 123. But yeah, this is also, you can choose your band and then you could profit out of this strategy. Hope you have enjoyed, and hope you have enjoyed this video. I think I forgot to show you this. So yeah, this is the Donchan channel. You basically get an upper band right here. It's about 140. The lower, usually it's following it's always above the middle band, so you can take a little bit strike towards the downside. So 125 around 142 should be your band for this. So essentially you can play this iron condor here, and you can profit from this option strategy. If you really did enjoy this video, and if you want to know more about these option strategy, let me know in the comment section below, and I would be very happy to create more and more tutorials and option strategies for you. As I said, I'm not a financial investor, but I've been learning things by myself, self-taught person. So, decided to teach you guys. Thank you so much for watching. Keep smiling, keep coding, keep learning, and see you guys in the upcoming tutorial.